Hi guys, Whitney here. Welcome to today's bootcamp. We are talking about how to vet operators in markets. And if this is your first time attending one of these boot camps, welcome. This is the Passive Investing Made Simple bootcamp. Here, we actually deep dive in helping you create the tools, develop the skills, move from just understanding and remembering terms and terminologies and actually putting them into practice. That way you can go forth into your next or first or next deal with confidence. And so if you haven't joined a boot camp with me already, this is where we help bust apart those myths of why investors may not actually ever get invested in a passive deal. Today we will learn how to properly vet operators in markets, and we will table how to vet deals in probably into July or August, because in that workshop, we're going to spend an hour and a half putting together your deal review checklist. So this is just the first part of the process. That way, over the next few weeks, you can actually start hopping on the phone with operators, understanding their markets. And this, again, is just really, today, we're helping you understand how to just move from just like a gut feeling when you're investing with an operator to actually having your ducks in a row and being able to compare apples to apples. Now, the first thing I want to help people understand is, in a myth that sometimes people have whenever they move into passive investing, is investors think that they don't have any control. They're like, if I pull my money out of the stock market and I move my retirement funds and I invest in passive real estate, or if I sell my single family rentals and move into passive real estate, I'm giving up control. And you are hiring, this is how I want you people to think about it, you are hiring a COO of your business whenever you invest passively. So that's the mindset we should be having when we learn how to vet operators in markets and deals. But you still, and I actually argue, you actually are in more control of how you're going to invest according to your goals, according to your risk tolerance, according to the timeline that you want to be invested in. And then we can go out and find those people that are going to help you achieve that goal. And that is the mindset shift that has to happen whenever we move from stocks, bonds, and mutual fund world or more active forms of investment, is that you actually have to think about you are hiring the COO of your business. Now, there's several other, a couple other myths that people tell themselves. We'll tackle those in future videos. But if you don't know me, if this is your first time joining one of these sessions, my name is Whitney Elkins Hutton. I'm the Director of Investor Education here at PassiveInvesting.com. And this is the whole reason why I invest in real estate, is me and my crazy crew here. I started off in 2002 as a live-in flipper and house hacker. Those terms didn't exist back then, but I bought a house with a significant other, and about a month later, the relationship fell apart. I stuffed it full of roommates. I completed the rehab on the property, and 11 months later, I sold that property for more than I made in my day job that had me traveling upwards to 80 hours a week sometimes. And not only that, I had outsourced all of my housing expenses. And I was like, this is the greatest thing since sliced bread. How many more times can I do this? Now, over the next few years, I did several more live-in flipping and house hacking projects alone, and also with my now husband pictured here. And then we decided we were really good at creating equity. Now we needed to figure out how to create cash flow. So we started putting renters in some of those projects and developed over a portfolio of 36 single-family homes and still flipping on the side. And then we had a baby girl. And I was taking care of family members, and I needed to figure out how to not only grow my income quicker, but do so in a way that didn't require me to be 100% involved. Because if any of you out there know, if you own your own rentals, even if you have a property manager, you are still in charge of sourcing the deal, underwriting the deal, finding all the lending on the deal, closing on the deal, finding the property management, managing the property manager, still doing a lot of day-to-day decisions. And so that's when we decided, are we going to grow our portfolio with larger multifamily deals, getting more units with each transaction, Or are we going to do this passively and learn how to bring others onto our team so they can help us achieve these goals a different way? Well, color me crazy, I did both. And fast forward today, my husband and I, these numbers are old. That's how long ago it's been since I've done this presentation. We actually have over 6,500 residential units, multifamily units under our belt, 2,200 self-storage units. And at the end of July, we will have 15 car washes, express car washes. But those are just vanity numbers. What you are probably wondering, what is the result? And the result is that we have 100% control and choice on how we spend our time. And I choose to spend my time here with you, teaching you how to do similar things so you can reap a similar result in your life. And we can actually help you do that here at passiveinvesting.com. With our close of our most recent car wash portfolio, we're now up to over 1.4 billion assets under management. We have a 21.6 IRR, internal rate of return to our investors, 28.9% ARR, over a 56 valuation increase on our assets in 27 months, and have made over 51 million in investor distributions. So we're very proud of those stats. Now, today, we are going to go through how to vet operators, markets, and deals. Now, if we dive into any numbers, I have to put it out there. It's not financial advice, legal advice, tax advice. You have to take all this back and own it, right? Like, you are in charge of your own investment decisions. Make sure you have the right team members in place, a lawyer, an accountant, maybe a financial advisor to help support your decision-making process. All right. And if you haven't already, this QR code may work. Hopefully it still does. But if not, you can join me at passiveinvestingwithwhitney.com if you're watching this after the fact. And there you can get access to not only our masterclasses, our boot camps, but also priority access to our deals. All right. Now, guys, I apologize. I have a little bit of a sniffle today, so bear with me. All right. So if this is your first kind of foray into passive investing, right? I have to kind of catch everybody up and make sure we all have a good understanding of what passive investing is before I can move forward to tell you how to start vetting the operator. Okay. Why is it so important that we learn how to do that and develop that skill? Well, the operator is going to help us achieve these 5 freedoms. So we want to know that operator is somebody that can run with that deal in that relationship that we have. If we bring the money, they bring the active time, that they are going to help us hit these 5 freedoms, because this is what we're after. All right. The reason why people invest, the reason why people you can boil down anybody's purpose to either wanting financial freedom, time freedom, choice freedom, location independence freedom, or the freedom to go out and create impact and vitality in the world. And so it's really important, if this is where you're orienting, that you are aligning all of your goals towards that. Now, the reason why group investing can be so powerful is that maybe you have a higher and better use of your time in your day job. Maybe you're a doctor, a lawyer, maybe you're an operator in a different real estate space. I just got back from talking to a team, over 100 luxury realtors in the North Dallas market. And every single one of them had done a transaction over $2 million in the last year, multiple transactions over $2 million. None of them were financially free because they weren't taking their chips off the table, that active income off the table, and building a passive wealth generation machine in the background. And that's where group investing can come in so powerful. If you have a higher and best use of your time, you can now come together with other experts in the space to help you get access to a large real estate property or a large business, like we do with Express Car Washes, that owns its own real estate. And so syndication really just means a group of people coming together to take down an asset. It can be a multifamily, self-storage, car washes, hotels, you name it. But at the end of the day, this group investing creates massive leverage in your life, right? And a lot of people, we need to orient around what are we actually taking advantage of? Where's the leverage point? Well, when you do this group investing, generally there's a active operator. You're probably going to be the passive partner, meaning you're bringing money and capital to the table in exchange for a return. And then the operator is going to get a slice of the pie, but they're going to run with the deal. And what they bring to the table is the knowledge of the strategy and the market, the underwriting, all the lending terms. They're going to bring their track record, their business systems. They're going to bring their whole team, property managers, brokers, lenders, accountants, legal. They're going to bring their ability, the balance sheet to close these assets. All right. I've invested in assets that are upwards to $120 million. I don't have that sitting in my bank account, but when I partner with other people, I can access that type of asset. All right. They have a mechanism. They have a way to pull other people's capital in order to be able to take down the asset. But most importantly, they have the time. Okay. They have the time to underwrite the deal, to complete the due diligence, and to run the deal. Okay. And that is where that leverage is created. Now, I generally start off this session in helping people understand their goals, right? That's kind of step number one. All right. I have another bootcamp recording. You guys can reach out to me afterwards that goes through goal setting and risk tolerance, okay, in detail. But right now we're just going to take a little bitty recap, because you have to know your goals before you can start reaching out to operators. You don't have to be 100%, but you have to have really sat down and thought about what your goals are with real estate. The first thing is, do you believe in real estate as an investment vehicle that can help you achieve wealth? If you cannot resoundingly say yes to that, all right, I know real estate has made more people millionaires and billionaires than any other investment class out there. Okay. I have seen the power of it. I have proven it to myself. I have proven it to other people. But if you can't resoundingly say that for yourself, this is going to be an uphill battle for you. Okay. Really sit and think with that first question. Okay. If you can check that box and say, yes, real estate is for me. Now sit and think, what do you need that investment to do for you? Do you need it to preserve capital? Do you need it to create cash flow? Do you need equity build? Do you need some of the pass-through tax benefits? All right. Do you need to use the smart use of leverage to help amplify your returns? Do you need to hedge inflation? Okay. Or do you just need general portfolio diversification? Now, here's the thing. Most people have 3 or 4 of these that they're looking for, that they really truly need in their portfolio right now. So order them, those 3 and 4. Okay. But also, as you move through your investing journey, your goals will change, as they should change. All right. For most people they're very new in their investing journey, all right, they feel they have time on their side. A lot of people will say, I just need to grow my net worth as quickly as possible. And a lot of people, if they're closer to retirement, and be like, no, I don't need so much the net worth growth. I just need the cash flow so I can go make my retirement a smoother transition. Now, I personally love investing in real estate for capital preservation, cash flow, equity, and tax benefits. I'm looking for those 4 things in my portfolio, absolutely, in every single asset. Okay. But everybody has a different goal in mind. So think about what your goals are. And the most important thing, don't borrow somebody else's investing plan and make it your own if your goals are not identical. All right. And that's where I see more investors get in trouble, is that they follow somebody online. They're like, I'm just going to copy what they do. And they don't think about that their goals can be entirely different. All right. All right. Now, the last question in this recap is to understand your investment timeline. Okay. Most passive investing deals have a timeline, especially conservatively underwritten passive deals have an investment timeline of about 5 years. All right. It gives a nice, healthy runway for the operator to acquire the asset, stabilize the asset, position it for for performance in order to disposition asset. And it gives you a little bit of time, probably 18 to 24 months, should there ever be a hiccup in the economy, like we are experiencing probably like in the last year, right? With interest rates going up. Gives a little bit of time for the business plan to adjust. Now, like I said, for me, I think conservative timeline in about 5 years. It can always disposition earlier. It might push a little bit later. All right. Now, if you're on a more aggressive timeline and you need a 2 or 3 year turnaround, just know that your risk tolerance will probably be higher. You're going to have to take on more risk. All right. So these are interesting questions for you to ask yourself, because you need to create what we call internal alignment between what your goals are, your risk is, and your timeline. All right. Now, and I've alluded to risk. All right. So here are some questions to consider on the risk front. Make sure that you're looking at the business plan, looking at the operator. Have they ever had any loss of capital to investors or made a capital call? All right. Have they ever had to suspend distributions? Now, that alone isn't necessarily saying that the investment's risky or that the operator's risky. You want to understand what happened and have they learned from that experience so they can make sure they never do it again. And what are the inherent business plan risks? This is where, are you investing in an asset that's pretty much a core plus asset? There's no real deferred maintenance or CapEx. Are you investing in more of an opportunistic asset that has a deep value add strategy, or maybe is ground up development? All right. Some of those opportunistic strategies tend to have a shorter timeline, okay? But they also take on a lot more risk. So you just need to make sure you create some sort of alignment here. All right. So that's the goals recap. You can certainly reach out to me at whitney@passiveinvesting.com if you'd like the link to that. Of course, we will always, once a year, redo that goal setting workshop for you. So and make sure that you're on the passive investing with Whitney.com list. That way you get notified of when that next workshop will be. So let's talk about control, right? If the passive investor, once understanding your goals, your risks, and your timeline, if the only 3 things that you can control are who you invest with, where you invest, and what deal you go into, then let's actually start picking that apart. But the first thing is we actually have to understand what the word control means. And it's a verb, okay? This is, out of the dictionary, Webster's dictionary, and it means to determine the behavior of. What it doesn't mean is eliminating all risk. All right. So control is that you're supervising the running of, you're determining the behavior of. So essentially what I'm, helping you understand is when you say, a lot of people think I need to control the asset. They think that if they actually own the asset and they're controlling it, that they are eliminating all their risk. And that's simply not true. When you have control of an asset, is that you're actually in charge of supervising the behavior of that asset. Okay. Now, this is where it becomes super important that you pick the right operator, because they're going to be the ones that have the day-to-day eyes on that asset. All right. So as we start investing or reviewing the operator, the vetting the operators, the number 1 rule of any investing is to not lose money. Rule number 2, see rule number 1, our buddy Warren Buffett here. All right, so let's fully understand this relationship here between the limited partner and the general partner. So, because a lot of people, I think they have a hard time moving from the stocks fund and mutual fund world into a passive real estate investment. They think it's a really complicated relationship. And at the end of the day, it's not. All right. You have 2 groups of people. You have your general partners and your limited partners. The general partners are the ones that are taking on the active role of the asset. They're finding the deal, purchasing the deal, running the deal on a day-to-day basis. They're handling all the lending decisions and any of the sales decisions. Now, they choose to take on this active role in order to get a slice of that cash flow and the equity of the deal, right? Now, they also are bringing a team to the deal. They're bringing the brokers, the lenders, the construction crews, the property managers, insurance, legal, bookkeeping, 1031 providers, fund administrators. They're bringing all of that to the table. Those are team that you do not have to source and oversee. Now, as a limited partner, what's your role? Well, for you, as a limited partner or the investor, your role is to conduct due diligence that is presented by the GP. Okay. Now you're doing due diligence on the GP, the market, and the deal. That is your role. Okay. Once you have checked that box and you have decided to go in the investment, your next role is to fund the deal and then respond to any requests from the general partners. Now, you, okay, might choose to be take on a more passive role, because you want a share of the profits in exchange for your time. Now, I have so many investors that I speak to that are actively involved in real estate. And they might be doing multifamily and they would love to go out and buy their own self-storage facility or develop their own express car wash. And they are like, gosh darn it, I did it in multifamily. I can do it in another space. Yes, you probably could. And should you? Right? Because he who chases two rabbits generally catches none. So that's where it is incumbent to you to understand yourself. If you have a deep knowledge in one particular space, think about leveraging other experts in other asset classes in order to get exposure there. For me, I love multifamily. I understand multifamily. I will buy multifamily. But for me to go out and try to learn self-storage, inside and out, or express car washes, develop on my own, probably that is not, I would have to hire out. I'd have to go find that who. And that's why I choose to do this passively. So this is how the whole slice, if the GP and the LP will put together in a pie, this is how it all comes together. The GP has the ability and desire to manage the deal. They have the time, they have the people, the systems, the lending, the credit, but they need capital. The LP has the capital in place, but they do not have deal flow or the ability, desire to manage the deal. Okay, therefore they need time, people, systems, lending, and credit. So this is why this whole thing works. Now, again, this is helping us get caught up on the relationship. That way, as we move forward, we can truly put together, understand what it is that we need to ask of the operator before we move forward. All right. So here is some questions to ask the operator. Now, if you guys want, you can email me at whitney@passiveinvesting.com, and I will share with you my LP tools spreadsheet, okay? At the end, so if you email me today, you can go ahead and do that right now, that's totally fine. I'm gonna save everybody's request for 1 week later, and next Friday, you will have an email in your inbox with my LP tools spreadsheet, okay? So be sure to get that done. It gives me time for everybody to ask for it over the weekend and everything like that. But here are some of those questions that are on that spreadsheet when you're talking to the operator. Now, these are things that, yes, you could probably glean a little bit of information from somebody's webpage, maybe by word of mouth. But even then, I would encourage you to hop on a call with the operator and ask some of these questions or determine the answer to these questions yourself, because the operator is the deal. All right, they make or break the deal in and of themselves. A great operator can take a mediocre deal and just knock it out of the park. A not so great or not so seasoned operator can take a great deal and tank it. Now, you guys, I know if you guys have additional questions, make sure to pop them over to the Q&A box. I will leave a little bit of time at the end of today's presentation to answer those questions, but we've got a lot of ground to cover here. So, whoop. Hold on, I've got like a screen that's popped up here. All right, so let's go back to here. First question is, do you know, like, and trust the operator? Okay, is this somebody you want to do business with? Okay, do they seem genuine? Do they seem honest? If they don't, I would run. Okay, and I always tell people, listen to your gut. Okay, if you have talked to the operator and your gut is telling you, ooh, I don't know about this operator, think about that. Okay, write that down and dig further on that. Okay, and it might take several touches. Going to meetups, coming to webinars like this, going to conferences. listening to podcasts from that operator for you to really truly know, like, and trust them. Remember, you are trading your time. It is taking you time to build the wealth that you have, and now you're going to invest it with an operator. This is the most important step that you can take. Okay. What is their background? How many syndications have they done? How many deals did they take in full cycle? Who's on their team? What is everybody's roles? Who is managing the asset? What is their typical investment strategy? What are the major risks of the investment strategy? Okay, what is the lending? Now I'm going to go over 8 red flags here in a second, and these are flags that you need to suss out in that conversation. What is their communication plan, their K1s? Have they ever had an asset go sideways? Now, that is a little bit of a loaded question, because if they have had an asset, if you ask an operator, have you ever lost money on a deal? And they have a deal a couple deals that aren't doing so well right now, the operator can actually say no until they've lost the deal in foreclosure court. They can actually say no to that question, and they are not lying. All right. So you want to kind of dig a little bit deeper on there. Have you ever done any capital calls? Have you ever suspended any distribution? If so, what happened there? Right. You want to, dig deeper on some of these questions. What does their standard waterfall look like? What kind of fees do they have? And do they do a general partner catch-up? Those are things that I help all of our investors, really truly understand. These are ways, on how the deal is being structured and who gets paid what when. Now, several of you guys are sending me your email in the Q&A box. I want you to actually email me so I can send you the spreadsheet directly. So go to whitney@passiveinvesting.com and email me directly. All right. Okay. So the red flags here. If you're on that conversation with somebody, and you just uncover that there's only one managing partner, there's no succession plan. What happens to that partner? Or if there's 2 partners, but they're married, what happens there if they happen to be on the same flight and something happens to that flight? Or heaven forbid, they had, a loved one get sick and their time and attention has to turn to that loved one. What happens there? What's the succession plan? What happens if they're not full-time in the business? Now, I understand people have to start their business somewhere, some way, somehow. I get that. And for those newer operators, I highly suggest especially if you want to invest with a new operator, maybe they are offering better terms, somebody on their team has to have that track record in their business, and somebody on that team has to be full-time watching your money as if it's your money. Okay. Number 3, do they not have a track record for investing? If they don't, that's a problem too. Okay. You get a choice of where you invest your dollars. Are they not an active participant in the deal? Okay. That's a red flag for me. If they are, if they're, and this is kind of like a little bit loaded, because there are people out there that are in a co-GP relationship, and the majority of their time is spent dealing with investors. But you want to make sure that if you are investing through one of those people, that they are actually involved in the asset managing decisions of the asset. Okay, you want to make sure they have their thumb on the pulse of what's going on. And a lot of those people actually aren't. Okay. Are they a full-time operations team with a track record? Are they co-investing in their own deal alongside their team? Okay, or alongside the deal? Are they investing more than their acquisition fee? Okay, are they using smart use of lending? That is another red flag. I would add that into this list. Okay, are they actually investing in, securing either fixed rate debt or a floating rate debt with a cap? And are they underwriting the entire deal at the cap? And have they started saving for the new cap? All right. So those are things that you want to consider. Those are some red flags. For me, if these red flags pop up in the conversation, this is the ones that kind of made me go, whoa, give me like some real pause here. All right. Now the question then becomes, and again, we've spent so much time understanding the relationship between the general partner and the limited partner. partner, why this relationship works, okay? And you know you best, okay? That's why a lot of people try to build their real estate empire on their own, and they kind of shut everybody out. They were like, I want to maintain all control. Really, what your mind's trying to trick you to do is to say, I want to mitigate as much risk as possible. If something goes wrong, it's all my fault. Okay. Really, the people who scale the fastest learn how to build their businesses with other people in mind. Okay. So they know how to find these amazing operators. And so let's help you figure out where are some places that you can find these people. Well, first, quite simply, ask other investors. Are you in an investor group? There's so many of these groups that are online these days right now. So a shout out to Left Field Investors. They're a group that we work with. For me, I'm part of Boulder Investment Group. There's another group out on the California coast called For Investors by Investors. There are congregated groups of investors that are all vetting deals together and share the operators list together. Ask other investors. Okay, go to high-level conferences. We have our Multifamily Investor Nation conference next week in Charlotte, June 12th through 14th. Join us at one of these conferences because all those high-level operators will be there. Okay, join investment groups. That kind of ties back to number one, but you're not just going to like talk to other investors, join the group. Okay, maybe you don't know anybody in your circle. I know for certain when I first started, I knew nobody in my circle of my friends and family that were doing things like this. So I had to actually like go pay to join an investment group to start learning from those group of people. All right. And then number 4, Google search. Not my favorite way to do it because anybody can be really great at marketing and SEO and keywords and all that. But you can get a nice list of operators to then start vetting and making sure that you're running down this list. Like, are they attending high-level conferences? Can I go and look them in the eye and shake their hands? Are there other investors that have participated with them? The number one mistake that I see people make, new investors make, is that they find a friend that is invested before, and they think their friend has done all the due diligence. Sometimes they have, sometimes they haven't, and they invest because their friend did. Okay. And then they lose money because they find out their friend did the same thing, okay, and never underwrote the operator, okay? So you might hear of deals through a friend, which is totally fine, but it is your ownership. You have to own. This is your most important level of control. You have to do due diligence on the operator before you write the check, all right? So just a little bit of a recap here. When we're talking about operators, before we move into markets, make sure that you're keeping a list of all the operators that you've learned about, and then also keep a list of who you've talked to, because this whole vetting process can get a little bit overwhelming. All right. Okay. Now, I always encourage you to, a lot of people, what they'll do is they'll sign up for every single investor list under the sun. Now they just have overwhelmed their inbox with operators that they're looking at. As soon as you determine that an operator does not help you meet your goals, your risk, or your timeline, unsubscribe from their list. Get off the list. Okay. If there's no other perceived value that you're getting from them, get off the list. Okay. And really what you're doing is you're clearing space for that operator that is going to be the partner that you want to be partnered up with. Okay. All right. Make sure to screen your operator before you hop on a call with them. Just kind of go through the materials, go through their initial marketing emails, and maybe like listen to a podcast or something like that. Take the time. You can always listen to the podcast on 1.5x or 2x and just kind of high level screen them. Okay. See if you can find any of those red flags. If you can't find any of the red flags, schedule a call. All right. Okay. Make sure that your time's valuable, their time's valuable. And while you're on the call, take notes. Again, I have that, checklist. I will show it to you here in just a second. But as you go through the checklist, maybe you get through all your questions, maybe you don't. But remember, that call is not the only call you'll ever have with the operator. That is your first call, right? They'll send you some follow-up information to review their company. Review it, ask follow-up questions. Remember, you are hiring you're the CEO of your investing business. You're hiring a COO or multiple COOs. Okay, take the time to do that. All right. Now let's dive in a little bit, a few minutes, and talk about vetting markets. And then I'm going to leave about 10, 12 minutes open for Q&A. So if you have some questions, make sure to start dropping those over into the Q&A box. But markets, okay, past the operator, the market is the next area that you need to understand. Okay, where are you investing? Because real estate is very much local. All right. Now, this is another reason why I don't read the news. I read local, I keep track of real estate through market reports, okay, not the CNN. All right. The only reason why I pay attention to CNN is because I want to know what my investors are talking about, whenever they mention something in the news. But real estate is very hyper local. Okay. You can't take a global, what's happening to the, commercial real estate, and assume that every area of the United States is going to be impacted by the same thing. It's just not going to happen. So how do you understand those markets that are thriving? Okay, well, here's some criteria to look at. So you want to be in areas, metropolitan service areas, like large areas like Charlotte, North Carolina, Columbia, South Carolina, Raleigh, Durham, right? Those are metropolitan service areas. There are large service areas and there's multiple submarkets in those areas. So on a high level, what you want to look at both the metropolitan service area level, as well as whatever submarket that, in that area, like, Research Park, those, you want to make sure that these things are happening. One, that the population's growing, that the jobs are growing, job diversity is present, that it's not just one employer in town or two employers in that area, that there's multiple employers in that area. Income growth is present. Crime rate is declining. Poverty is declining. I like investing in states that are landlord friendly, okay? And meaning that they leave a lot of leeway up to the operating team to figure out how they're going to work with their tenants, okay? I also like investing in areas that are very favorable for tax laws, okay? They understand business. Now, a lot of those taxes get shifted down to the property level. It's not so much that you won't ever pay taxes, it's that it all gets shifted down to the property level. And so we want to make sure that we're keeping our expenses as low as possible if we can. And then if we're on the submarket level, I would also add in a couple of different, additional criteria. You want to make sure in that submarket that the supply and demand trend, whatever asset class you're looking at, multifamily, self-storage, that it's actually in your favor, that there's more demand than there is supply, okay? And then location, 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 right? Real estate is immutable, like it cannot be moved, it's immovable. So, once you are invested in a multifamily building and you're like, man, we should have invested in the building a half mile down the street, you can't pick up and move the business, okay? So you want to make sure you're in a good location in that area. So again, high level, what's happening at the metropolitan service area level, what's happening at the submarket level. Now, how can you, as a limited partner investor, get an idea of all this in a very short amount of time? Remember, one of the reasons why you are investing in a passive deal is because you want to leverage somebody else's time. So how on earth are you going to educate yourself on these markets? Well, first, if you're looking at a deal, there's an offering memorandum. Okay, so that's a nice, pretty marketing package. Probably the returns of the deal are going to be upfront. All right, I encourage you, go look at the market. Okay, maybe do that first. Learn the market, get some past deals, close deals from that operator, and start studying the markets they're in, because that data changes slowly. Okay, if they do 3 deals within the Savannah, Georgia area, that's not going to change, or Myrtle Beach, that data is not going to change very readily year over year. Okay, you can start gleaning a lot of information about the market by studying old operating memorandums. Okay, you can also double check that data against CoStar, Marcus and Millichap, CBRE reports. Okay, that's probably where the data is being pulled from begin with. All right, but you can actually go pull those public market reports. Now, you can also go on a site called like city-data.gov, okay, and double check some of that data as well. It's a little more wieldy of a site. For people who are really good with numbers, they love numbers, that's a great site to go to. For people who are like, ooh, I want somebody to have already done all that number crunching for me, give me the color-coded version. Go to niche.com and look up the area, and you can drill down into the submarket, even down into the school district. It's pretty cool. All right. And any data that you have a question about, or you find a discrepancy, go back to the operator, because they should be able to readily pull that data from that deal and say, well, great, this is what, the local business journal says, but when we started analyzing CoStar reports, this is what we actually found. They can hand that data back to you. Okay. So that's how you're going to get, dialed in on that vetting the operator in the market. Now, vetting deals, we are going to kind of pause, and we are going to dive into vetting deals with our next session. Okay, so for those of you who are just like, wait, what are we doing? I thought we were only going to be here to noon. We are only going to be here until noon, or like for 1 hour. So I'm going to stop my screen share here real fast, and then I'm going to show you this tool that I actually have available for you guys. Again, if you want to email me at whitney@passiveinvesting.com, I'll be happy to email this to you, but this will at least get you started, because remember, part of this workshop is helping you not only to understand the deal, but also how do I put together the tools that will allow me to start doing this for myself. And that's what I want to show you next. So what does a good vetting process look like for an operator? So here's and again, this is a whole tools spreadsheet, and I do several videos to help people understand how to use this. But here are red flags. Okay, essentially, I'm trying to determine up front, before I even hop on a call with them, if any of these red flags are present. Okay, it doesn't necessarily mean I won't get on the call with them, but I'm already kind of on heightened alert. Like, what am I trying to figure out here? Like, what's going on with this operator? If I have an operator that has multiple red flags, and I have 2 operators that have 0 red flags, okay, even though operator 1 might have some better numbers on their deals, I need to pay attention to that, because operator 2 and 3 might be my better choices at helping me preserve capital. Okay, that is probably the #1 investing mistake I see newer investors make, is they get lured in by the returns, not fully understanding just how risky these 8 red flags can be to their investing. And they all lie at the operator level. All right, and here's some interview questions. Okay. And again, you can keep track of these. This is very important. As you're interviewing operators, you're going to want to take some notes. Have an apples by apples comparison. Have a process that you run through. And the reason why the process is so important is because it's going to save you time. It's going to save you from having a headache, and it could very well save you from having a heartache and losing money. All right. And then also on the spreadsheet, and feel free, add additional questions here. Okay, these are just some of the ones that I like asking, of operators. I also have some additional things down here, like when I'm vetting an operator, have I actually done it before? And I do this before every single investment, every single check I write. I will go search the partners' names plus legal in Google search. Okay. I will go look up the company name plus legal in a Google search, because I want to make sure that nothing's happened, materially has changed since I last invested with them. And then I'll research all their previous holdings on the Securities and Exchange database, the Edgar database. So there's a couple other, like little tidbits there. And then on the market, here's my process. As I'm looking at the old offering memorandum, I want to make sure that I'm looking at the market, but here I can get market data from operator number one. And if I'm investing in the same market and sub-market through operator number two, I just need to double check some numbers, right? So the market research can also be done singularly as well. You only have to go through that generally one time and just keep on top of the data. All right, guys, hopefully this was useful. If you thumbs up, go over to the Q&A box if this was useful. If you have any questions, make sure to let me know. Drop those in the Q&A box as well. And most importantly, I just want to thank you guys for being here and spending your time, not only here with me, but also investing in yourself.